Well, hello everyone. This is Sam here again, and I thought this week instead of writing you guys a newsletter like last week with Facebook, I would actually record something to share with you. I was going to talk about this actually in the preterm session next Tuesday, but there is something else that I think I would like to cover in that session, so we may not have enough time. So next Tuesday, I probably would talk a bit about Turkey if we have time for that. So I just want to say a few things about the recent and very interesting incident that happened with Tesla. And those of you who were on the WeChat that night, you would have noticed that I was typing away, and I said, I could think of at least a number of relevant issues that came to my mind, and I could think of these ones regarding Tesla. Now, so it's funny. This is actually a perfect case that I think it brings up a number of very interesting issues that will be discussed in much greater detail that I can think of, at least in capital markets. First of all, the second one is in China equities with Professor McGinnis. And the third one is in derivative trading. Okay, so I think this is a perfect case for me just to give you an idea of why this case is so interesting and the issues that are involved. Because unless you know what the issues are, unless you are crystal clear, you want to sound like you know what you're talking about when you are in front of finance professionals. And unless you know exactly what the issues are, it may not be that easy. And in finance, as in life, there are often like 17 different issues taking place in 9 directions. So you got to be quite clear. Now, first thing to discuss is what exactly does it mean to take a company private? Okay, people were asking me, I thought Tesla already was a private company. Well, private in the sense, Tesla now, it is private in the sense that it is obviously not owned by any government. Okay, the way the post office is owned by the government in some countries. Okay, including Hong Kong. The railway often is owned by the government, not always, but quite often. Okay, so when it's government owned and there isn't actually a structure with publicly listed tradable shares with publicly listed with shareholders. Okay, that's a I guess. Well, okay, so. Okay, let's put it this way. Okay, so a company can be it's either owned by the public, okay, or it's privately owned. Now you got to be a bit careful what you mean by owned by the public and what you mean by owned privately. Here, the way I am defining this is public means it's traded, okay, in a stock exchange somewhere. That's what I mean by public. Okay. Now private obviously is, so that means that the stock must have had an IPO at some point, initial public offering. So there are shares and you can buy and sell shares in a stock exchange. That's what I mean by public. So private is clearly when that doesn't happen and there are still the company still has shares. Okay, it's just that you can't buy those shares in the stock exchange. So it can either be, it's private equity, so that the ownership, in other words, is in private hands, and you don't have to. The shares are not listed for trading, or it could be a state-owned enterprise, I guess, strictly speaking. Okay, now I'm not so interested, or I don't really want to talk about this one for now. Okay, so right now, Tesla actually is a public company. There are shares that you can buy and sell in the United States. The stock code is TSLA. Okay, so what it means when you take a company private is, so they have a balance sheet. So there are assets on one side, there are liabilities, and there's equity. Okay, now part of that equity, at the very minimum, maybe 25%, would be available for trading in the public. So the other 75 or less. Okay, I'm not saying it must be 75. So the other part would be basically in private hands, and it's not what we call in a public float. Okay, now taking a company private simply means you buy a sufficient amount of this 25%, 30%, or whatever it might be. You buy a sufficient amount. What is a sufficient amount? Maybe 60, 70%. Okay, it depends on where you are, or what are the local stock exchange regulations, but it doesn't matter. Okay, so anyway, so you buy a substantial portion of the publicly traded shares, so that a substantial amount of these are in the hands of a few individuals, or maybe just one guy, okay, or a few big shareholders, such that the majority ownership is now just in a few individuals. Now, please don't pick on the details here, because you are going to study the details much more carefully later on. But I'm just giving you the overall framework. You don't need to focus on the minor technicalities. Okay, so when you take a company private, it just means that there's one or several major shareholders have bought up all the available shares, or most of them, that originally were trading in the market. So they, like a vacuum cleaner, they just suck them all up, and then that's when you can take a company private. And you might ask, okay, well, what is the good and bad part of taking a company private? Well, I'll tell you what's good to start with. Okay, a private company, in the sense that I have just described to you, it does not have to answer to shareholders in the manner that you do if you are a publicly traded company. And every 3 months you have to face the shareholders, and you have to answer to analysts, and they raise questions, and then the CEO and the senior managers have to sit in a shareholders meeting and explain, why we didn't do well, or maybe they did well. But anyway, so there's a lot of grilling and scrutiny on you, and then the disclosure requirements also would mean that you have to have your company accounts properly validated and audited, for full transparency for everybody to see. So if you're a private company, a lot of those requirements do not really apply. Okay, no one will ask you questions the way that they would if you were a public company. In fact, if you look carefully at what Elon Musk has been saying regarding his company Tesla, he was saying exactly that. He thought that at this stage, And I think that's what he said to his company employees. He felt that the business model and the challenges that are faced by Tesla are best handled if the company goes private. Okay, I think him and Wall Street, they don't always get on. Is my impression. Okay, now then I think your first natural reaction is, well, in that case, why don't we all become private companies if that's so good, and you don't have to be so transparent and accountable to all your shareholders with such high standards of disclosure? Why don't we all just become private companies? Okay, if you were thinking of that, you are in the right. You are thinking the right way. That is a natural question to ask. The simple answer is if you are a public company, public in the sense that you have conducted an initial public offering, IPO. Okay, so you are listed in some exchange. It is a lot easier for you to get further equity funding. Okay, it's as if suddenly you live in a home and then you have water. Okay, and then you turn on the tap and then the water comes. I mean, it's not as simple as that. But if you are a private company and you need to raise additional money, quite often it's far more challenging than if you're a public company. You are already listed, so all the documentations are there for everyone to see. People know you, people know who you are, people know your company, they know your products, they see it on the street, in supermarkets, whatever. Okay, so there are advantages to being a public company. Okay, now, so that's all I want to say now. So there are pros and cons for being a public as well as a private company. Okay, so what the hell happened? Well, what happened was if you've been following, for example, the Financial Times, so there was a story. Elon Musk declares plan to take Tesla private, and this, I mean, okay, in his defense, if you read carefully, so Mr. Musk announced his plans in a Twitter post shortly after a Financial Times report that Saudi Arabia's sovereign wealth fund has taken a $2 billion stake in the electric car maker. If the company really is worth close to $80 billion, $70 billion, $2 billion, in the greater scheme of things, is what? It's just 3%. Okay. So maybe he kind of felt that he had to say something, and he sent out a tweet on Twitter, which looked something like this: "I'm considering taking Tesla private at $420." Now, at that time, I think Tesla was trading around 330, 340 or something like that per share. Funding secured. Okay. Now, so first of all, how did the market react? Now that I will show you. Okay. So when he made that announcement, this is a graph of Tesla's share price. This is actually the x-axis is just a timeline. It's New York time. So 10 p.m. He must have made the tweet somewhere close to the end of the day in New York trading, but it instantly went from it started the day maybe around 340, just a little bit above 340, and it kept trading up, and then trading was halted, and then trading resumes after taking Tesla private. Blog post. There was no blog, it was a Twitter, and then it just went boom like this all the way up to around 390. Now, if you have been following the share price, of course, last night I think it closed around 350 something. Okay, it's nowhere near the high. I think it's see if I can get the share price. Yeah, 355.49. Okay, so that's how the market reacted. So instantaneously, there clearly was a reaction, but it didn't go all the way to 420, which was the price that he claimed. Uh, um, he would be able to secure funding. Although it's kind of hard actually to draw the conclusion that he's got funding secured uh, to take the company private at that price. Okay, this is sometimes you just can't take tweeters too seriously, honestly. Okay, and that I think is one problem we now have is people have such short attention span and they tweet and then it's best is especially useful for people who can't write long sentences and there are plenty of examples of people around like that. But anyway, so the stock market reacted to that. Now, equally interesting was how the option market reacted to it, and I can show you by way of, for example, now if you take a look at, I'll show you one page. Here is on that day, or I think it was the day after, when I took a snapshot of the the option volatility for Walmart. Not exactly the sexiest company in the world. It's pretty boring, good old-fashioned Walmart. And we will cover this in depth in derivative trading, I'm sure, okay, and maybe derivative markets. I'll talk to you a lot more about what implied, option volatility, what it really means. But just suffice for now. So this was, I think, last Thursday or Friday at around 9:43, 9:45. Now you can see the option, the implied volatility is trading somewhere around let's say 15% in the mid-teens, okay? And for the calls and the put options, for at least for the near term, okay, they are a bit different, but it doesn't matter. So that's Walmart. What about Tesla? Well, I wanted to show you Walmart just to give you an example. Now, for Tesla, the options for Tesla were trading like this. Can you see? The implied volatility for the Tesla, the option market, was in the mid 60s. Okay. Now, I want to impress upon you that this is not normal. It is not normal. You don't often get options, even for equity options, to trade with this kind of volatility. Okay, it should normally be somewhere in the high teens or maybe 20 something, but not 65% or 55%. Okay, so that's how the option market reacted as well. It simply means this. It means as far as option traders and option dealers are concerned, and also investors, they anticipate that going forward, the share price of Tesla is going to undergo a lot of volatility. We don't know which way, we don't know which direction, okay, but it's going to be quite volatile. So if let's say this was time, and this is share price, okay, share price. So something like Walmart. So maybe now we are here. This is now, okay. So for Walmart, it means the market expect that the share price might be like, we don't know which way it's going to go, but we they have some projection on the likely volatility or likely price distribution. For Tesla, let me use the red color, okay? Then the option market is basically saying that for Tesla, it is likely to be something like this, okay? Extremely volatile. That's what this is really saying, okay? Now the last the point I want to come to, or the last couple of points, relates to this, what I call proper disclosure. Okay, now the thing to remember is that if you are the CEO or senior manager of a company, then quite often, the things that you say can have what we call a material impact on, the company's valuation and the stock price. So you have to be extremely careful what you say, number one, and number two, how you say it. Okay. Now let's talk about the second part first. How you say. What do I mean? How you say it? What I mean by that is, what kind of platform are you actually using? Okay. If you are a CEO and you just get together with a bunch of investor friends, and then you tell them a lot of highly confidential company information, like profit estimates or new products getting rolled out or takeover plans, whatever it is, anything that you think can move the share price. If you tell people selectively, and then they go away and they act on that, there's a problem. Now, so if you had something which is extremely relevant to the company's direction going forward, then how you say it, how you communicate that information is very important. Now, what I mean by how is, if you were on TV, if you were doing an interview, and you know that your comments are going to reach a wide audience, or if you publish something in a newspaper, or if you speak on a radio, there will be no problem, okay? Or if you go on Bloomberg or Reuters, CNBC, any of those, okay? Now, the problem we have here is this guy actually used Twitter to communicate something which is actually, fairly significant, potential plan to take a company private. So some people were asking, is this proper disclosure? What if I don't use Twitter, okay? So the question comes down to, can you actually consider Twitter a proper platform? Is it no different than me setting up a chat room in WeChat and then just telling a bunch of friends, oh, I'm going to take this company private? What is the difference? Okay, so there is a problem there regarding whether you are reaching, whether you're playing fair and reaching or trying to reach, a wide audience everywhere. Now, he's probably, so I thought of that just at the beginning, and I kind of looked into it, and there have been, in the past, there have been a couple of quite interesting examples, and I think one of them we might discuss in capital markets. The example of Google. Okay, so I won't tell you. I'm not going to spoil the fun here. I will tell you about another case with Netflix. Now, a few years ago, I think the CEO of Netflix at one time he came out with an announcement that I don't know what it was exactly, but it was about, I think the subscribers increasing, or the company is likely to meet or maybe exceed the target revenue, something like that. And guess what? He did that in Facebook, on his Facebook page. So there was a challenge at the time from, I think, the SEC, the Securities Exchange Commission, the regulator in the US, saying, hey, is this really a proper platform for, fair disclosure? And as I recall, I think the guy, he argued that because he had a lot of people actually following him, so he regarded that to be a proper public disclosure to a wide, diversified audience. Okay, now, if that was the case, then I suspect that Elon Musk, he probably would not have a problem. He may get away with it because he claims that he has 22 million followers on Twitter. Okay, well, I'm not one of them, not yet anyway. So that being the case, you could argue that Twitter is indeed a proper platform. I don't know if there are 22 million Bloomberg users. Probably not. No, I strongly doubt that. Okay, so he might get away with it. What may end up happening though is not the how part. Okay, is what he said. Now, what did he say? Well, it's just one line. Am considering taking Tesla private at $420, funding secured. So I took a look at this sentence and I thought about it. And actually, the first part is not the problem. Am considering taking Tesla private. He's just considering, okay? You can consider anything. You can consider going to live in North Korea. You're just considering, okay? Although this is really kind of pushing the limit. The part where potentially there can be a problem is the last part. Just two words: funding secured. Okay, and in fact, I picked up a report from the Guardian newspaper where it said that he is likely to be questioned by the SEC over his statement because if you say funding secure, okay, two pretty innocent looking words in the English language, possibly there's a problem here. And the problem is, okay, so it's this paragraph, okay? The specific regulation lawyers believe Musk could have broken in his funding secure tweet is 14E, clause number 8 of the Securities Exchange Act, which prohibits publicly traded companies from announcing plans to buy or sell securities if executives do not intend to complete, do not have the means to complete, or are trying to manipulate the stock price. So Musk claimed he has secure funding. If he does not, then potentially there can be people lining up to sue him. In fact, 10 minutes ago, while I was looking at some more updated reports, I picked up another one. Some people already are trying to sue him. This is another one from. So this is actually a more up-to-date report. It's different reports. So Elon Musk and Tesla sued. Some people already filed a motion to bring him to take legal action. Presumably, it's people who are short selling the company. Okay. So what is the takeaway here? Or what are the takeaways? The takeaways are so apart from I've explained to you what it means to take a company private. You have to be extremely careful just how you communicate your company's info, and also what you tell them. Okay. Um, in the end, I I don't know. This is a very interesting guy, and whether you like him or not, you have to admit, that he is, what he's doing. These electric cars. I think he does care for the planet, and he's doing something in, solar power and electric cars. He is trying to, make the world a better place. But I guess this guy is maybe he's just a bit in love. Okay. Um, in love with who? In love with himself. Okay. He Some people have actually called him there's a name for that. It's called narcissist. I don't know if you've heard that term before. Um, nar, I don't know if that's the right spelling. Okay. Narcissist. Uh, and that is someone who is, constantly admiring. I think it came from a sort of Greek mythology about this guy who looked into the lake and then saw an image of himself, and he fell in love with himself, and he just sat there and looked at himself forever, something like that. Okay. Actually, in the medical world, narcissism is a definable serious condition. I don't think he's suffering from that. Um, it's interesting. A few weeks ago, you would remember during the World Cup soccer, there was a group of boys who were trapped in a mountain cave in Thailand, and he actually offered to build submarines to get the submarines in there and to rescue the boys. And he got criticized for saying all those things. When people called him a narcissist, and I remember reading somewhere, he said, if I am a narcissist, which may be true, what did he say? If I am a narcissist, which may be true, at least I am a useful one. And I agree with that. Actually, his expertise, somebody was asking him for help. So he was trying to lend a hand. And yes, at least he was trying to do something. Okay. I don't remember Warren Buffett saying he's going to build a submarine. So at least he was just trying to be helpful. Okay. But you get attacked sometimes. So we don't know what will happen to this lawsuit. It's going to be interesting. And also, I think the way the share price might develop next week, that'll be interesting too. Okay, so thank you for listening. Thought I would just share this with you, and I hope you learned something from this. Okay, so these courses will cover these topics much greater detail. Thank you. See you later.